It seems like Netflix is in a bit of trouble. The stock price is down over 75%, now trading at prices last seen in 2017. Now, why is this? Well, it could be the fact that it's losing tens of thousands of subscribers, with millions more potentially reported to be leaving through the rest of this year. It could be the fact that competition is now hotting up with other streaming sites such as Hulu, Amazon Prime, and even Disney Plus stepping up the competition. It could simply be the fact that the tech sector has taken a bit of a hit, and all stocks in the tech sector, not just Netflix, are having a tough time after an extremely good run post-coronavirus. What we're going to do is we're going to deep dive into the charts and get a much clearer picture of what the stock is doing and what the future holds for Netflix. Now, some experts say that Netflix is in trouble, while others say that Netflix is doing absolutely fine. It's just going to ride out this storm and there's good times ahead. As investors, it doesn't really matter what is happening in terms of fundamentals. As investors, we want to focus on the price of the stock, and we want to be able to make decisions in a very neutral and calm way to ensure that whenever we enter the stock, we are entering at the best possible moment to profit. It's all about understanding probabilities, and the best way to do that is to look at the charts. If you like today's video, guys, don't forget to like, subscribe, hit the bell notification. My name is Zahir Anwari. I'm a co-founder of Sublime Trading. We've helped hundreds of private investors over the past 10 plus years learn to profit from the trends in the markets through our simple to learn methodology. I also write for a number of publications, including benzinga.com. And I'm regularly invited to guest speak on our expertise here at Sublime Trading, which is trend following and how everyday people can supercharge the performance of their stocks portfolio with a particular focus on the next 3 to 5 years. So let's get into today's video. So this is my trading platform. This is TradingView, and this is our typical 3-screen setup whenever we are doing our analysis. We have the monthly in the top left, we have the weekly in the top right, and we have the daily time frame here across the bottom. We like to look at the higher time frames because the higher time frames, A, give us a very clear picture of what price is doing, and B, when we actually do take a position, it allows us to catch the big moves in the market by doing as little work as possible, because that's really what good investing is about. It's about doing as little as possible to make as much as possible. Often people will find themselves on the lower time frames, day trading, and that's where you enter multiple positions and end up doing a lot of work for ultimately little and inconsistent reward. So the smarter approach is to move your investing or your trading onto the higher time frames and to make your decisions from there. Now let's start on the monthly time frame for Netflix. We like to start on the monthly time frame, move to the weekly, and then go down to the daily time frame. So here is the tumble in price. The high is from November 2021, and of course currently we are in June 2022. At the high, price was around $700, and you can see that price is now trading well below $200, currently trading around $167, $168, $169, around that level. That is a drop in price of around 75%. That's a pretty significant drop. If we look at the history of the chart, we can see that the last time price traded around these levels was back in 2017. Price had been in a good run, particularly from the recovery from the coronavirus. So if I just expand the chart, we can see that this candlestick here, which was quite a volatile month, which is the month of March, this is when the coronavirus, February and March, this is when in 2020, this is when the impact of coronavirus first hit the market, hit the stock market. Now, if you look at a lot of other stocks, there were pretty significant declines in the market. The S&P 500, for example, fell 35%. However, Netflix held pretty well through the whole pandemic and then went on to perform pretty well as well, because when coronavirus hit, it was around $360 and price almost doubled in price to $700. So it performed very well through coronavirus and post coronavirus. Now, November 2021 is when price created its all-time high, and then it's been in a free fall ever since. If we go down to the weekly time frame, now the weekly time frame sees price below the 200 moving average and the 50 simple moving average, and the trend filter is red. If you notice, we've got periods of green when the trend is bullish, periods of grey when it's a sideways market, and then red when we are in a bearish trend. And so we can see that we do have a red trend filter and prices below the moving averages. So we are very much in bearish territory here. And if we go to the daily time frame, we can see that price is below all three moving averages. We've got the 200, the 50 and the 20 simple moving averages. The trend filter is currently red. Bit of a consolidation at the moment. So it'll be interesting to see whether price actually does recover at any point soon, or whether we see further weakness to the downside. The indicators at the moment suggest that we could potentially be seeing further weakness. Where could price move to if it does weaken further? Well, we've got this area of support, which is from 2015, which is around $130. If that's cleared, then we could see price move towards $100 and potentially even further. Now, what does this mean for us as investors? Well, first and foremost, if you're looking to short the market, you've got to be a little bit careful, because if you are shorting the market, with the S&P 500 still finding potential support with major support levels below price, this market at any point could reverse. So if you are taking short positions, you could be stopped out of those short positions. If you're looking to buy into Netflix, we have to apply a little bit of patience, because what we want to see is a recovery in the market as a whole, and then we want to potentially start looking to buy into the best performing stocks. Netflix is one of these stocks right now that it's dropped so rapidly that you potentially just want to ignore it until it finds a base and starts recovering to the upside. Netflix is not a stock that is anywhere near our top 10, top 20, even top 30. It's not even on our list. Of course, we do our analysis and we do our scanning on a daily and weekly basis. But until Netflix actually starts meeting certain criteria, this isn't a stock that we are considering purchasing at all, either to the upside or even shorting it. Now, this is where a lot of people go wrong. Often where people go wrong is they build attachments to a stock based on its brand name. Netflix is an example, Tesla is another example, Microsoft, Apple. These are all examples. Twitter at the moment, with all the noise that's surrounding Elon Musk, people end up building these very unhealthy attachments to particular stocks. And on the long run, that's not going to do you well. What you want to be doing is having a neutral approach across all stocks, having a scanning and analysis process that looks across the whole market, and then produces the best 5 to 10 stocks, regardless of brand name, that make it into your portfolio. And you want to cycle through this process day in, day out, week in, week out, year in, year out. Netflix at some point will no doubt come back on to the watch list. You know, if it starts to perform better, the tech sector in general starts to perform better, no doubt Netflix will come back onto the watch list. But for now, it's not one that you want to get too caught up in. So let's just move on. Netflix is in this area where it's pretty bearish. It's not giving us enough space to really short the market. It's not bullish enough. You really want to be standing aside. But let's have a look at a potential stock that you could potentially invest in that is performing far better than Netflix and even the stock market as a whole. So the way we do this is to look at how the sectors are performing, and then when we can find the strongest performing sectors, we can then narrow down to the best performing stocks within the best performing sector or sectors. So the first sector we will look at is, of course, the IT sector. So if I open up the monthly time frame, we can see the IT sector has taken quite a hit since December of last year. You're looking at a fall of around 30% since the start of the year, the end of last year into this year, a fall of 30%. And because the tech sector as a whole has taken a hit, all the stocks within the tech sector have crumbled. Nvidia, Microsoft, Apple, some have held better than others, but ultimately tech stocks have taken a real hit. However, if you look at the run prior to this hit, it performed from coronavirus. If you look at the low from March of 2020, you can see that the tech sector went on this huge bull run, 161, 162% run to the upside. So there was bound to be a correction at some point. Now, let's look at the energy sector in comparison. The energy sector has been performing very, very well. Since the start of the year, which is this bar right here, the energy sector currently is around 50% based on where the current price is. But at the high of June, it had even moved 66%. So the energy sector in comparison to the tech sector is performing very well. So if you did have positions in the IT sector in your portfolio, at some point when the reversals came in, you should have had an exit management that would have locked in profit, potentially cut you out of those positions depending on how you manage your positions, and then look to start loading your portfolio with positions that are from other sectors that are doing very well. So in this case, the energy sector is one of the best performing sectors. Now, that's not to say you've got to jump into the energy sector. You may still be applying patience, waiting for the stock market as a whole to recover. But if you are looking to place positions into the portfolio and at reduced risk because the overall market is a little bit uncertain, then you certainly want to be looking at the energy sector. If we look at the weekly time frame, the trend filter is green. On Netflix, if you just pop up to Netflix, well, first of all, the IT sector, you can see the trend filter is red, but of course on Netflix as well, the trend filter is red. If we go back down to the energy sector on the weekly time frame, the trend filter is green. It's above the 50 and the 200 moving averages. If you come down to the daily time frame, again, look how clean this trend is to the upside, well supported by the 20 and the 50 simple moving averages. Again, there's a bit of a pullback to between these moving averages. Indecision candle on yesterday's, by the end of trading yesterday. Ideally, we want to see the level holder support again, and then a move back to the upside. Of course, this isn't guaranteed. We could see further weakness towards that $600 round number, and then a bounce. If it breaks through $600, it could even come down to the 200 moving average. But currently, price is suggesting a bullish trend. This is just a pullback in an overall bull trend. So if the energy sector is doing well, we want to be looking at the strongest performing stocks in the energy sector. And I have one here for you, which is ticker symbol COP, ConocoPhillips. If I open up the monthly time frame, you can see that this is doing very, very well in comparison to Netflix, which has tumbled 75%. Since the start of the year, this stock has moved 53% where current price action is. On the weekly, price is above the 200. Let me just open that up. Price is above the 200 and the 50 simple moving averages. You can see a nice trend in play. And then also on the daily time frame, price above the 200 moving average, the 50 simple moving average. It's just popped in between these two moving averages, currently below the 20 simple moving average, but it's performing very well in comparison to Netflix. So guys, this is really the hallmark of good investing, which is really ignoring all the noise and the news. Yes, there's a lot of talk of Netflix, them losing subscribers, the competition out there, but that's just business. You go through peaks and troughs. Netflix are going through a bit of a tough time, but Netflix is a giant of a company. They are very likely to find some kind of stability, and then the stock reflect that when it finds an element of support and starts moving back to the upside. Until it does that, you want to be looking at other stocks that are performing better than Netflix and the tech sector in general. And as already mentioned, the energy sector is performing very well. So that's it for today, guys. Once again, don't forget to like, subscribe, hit the bell notification. Now, before I go, if you want access to some of the best performing stocks that are in the market, for example, the stocks that are in the energy sector, then all you need to do is go down to the link in the description below. Click on the link. The link will open up into this scorecard. Are you ready to skyrocket your stock performance? Take the scorecard, guys. It's a short scorecard that will take you less than 2 minutes to complete. 21 rapid fire questions. At the end of the scorecard, you'll get a detailed report on exactly where you are right now with your stock's performance and the steps you need to take going forward. And in addition to that, we've got a wonderful free bonus for you, which is 30-day free access to the Hot Stocks Vault. In the Hot Stocks Vault, we give you a weekly update of the top 10 performing stocks, regardless of which sector they are from. And in addition to that, guys, you get Stock of the Month, and you will also get 30-day free access to the TradingView setup, the chart that I've used earlier in this recording to do my analysis, the complete setup with all the tools that are on that particular page. A wonderful free gift to get you started, regardless of where you are in terms of your investing, whether you're new, whether you've got experience and you're looking to gather more momentum. This is an absolutely fantastic place to start. Because remember, guys, having the right stocks in your portfolio is really the foundation of a portfolio. If you don't have the right stocks or the right assets, you will always struggle. Once you have access to the right stocks, you can then build from there. So do take the scorecard, guys, and I will see you in the next recording.